Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Diplomats. I have four positions in my portfolio that are all down year to date. So I'm asking myself a simple question, Lanny. Is it time to add more? Is it time to double down on each of these four stocks?
Guys, smash that subscribe button. Give us a nice thumbs up for the YouTube algorithm. Your favorite dividend investors here. And Bert's been buying a lot of tech this year, really one stock, but he's taking a peek and a gander at the horizon. He's realizing four of his big tech plays are all down here in 2025. One is a smaller position out of the four stocks, and he's looking to possibly buy more of this stock.
Yeah. So we're going to run each through the screener. We're going to talk about the positions for each one of them. No, I don't have any predetermined outcome. You're going to kind of see my thought process live as we're going through this. So let's kick this off, Lanny. That first stock, Salesforce, ticker symbol CRM. They just announced that second dividend, their first dividend increase, second year of paying a dividend with a 5% banger. Salesforce down nearly 20% year to date, Lanny. It's been a rough 2025.
Yeah, down 20%, guys, down to 269.97. Valuation isn't looking too bad on Salesforce as we look through in the DD stock screener, down to 24 PE, 15% small payout ratio. Yield is now higher than Google's at 0.61%. But again, down 20%, still almost a 300 billion market cap stock. Traditionally, the price to earnings is at 42, so it's almost at half of that price to earnings right now. But you look at it, Bert, how many shares did you buy of CRM?
All right, so my position right now is I bought 8 shares. It dripped to 8.029. My cost basis is about $234 a share. I put in almost $1,900. My position is now worth $2,167, so I'm up 15% on it. And this is the one where you hit this video like a month or two, Laney. Like when a stock is just at your price, you should just go all in on it. I did not do that for Salesforce. So I'm stuck with this position that's kind of middle of the road. This position that is only 2,000. It's not a full position. I missed out on my chance. Now that it's coming back down, it's at a reasonable valuation comparatively for itself. I'm looking to at least add a little bit more. I'd love to at least get to a $3,000 market value here for Salesforce, which would be buying just over 3 more shares without any appreciation.
Yeah, I mean, I could see that. Again, buying a couple shares, heck, even 4 shares, just a little over $1,000 too. If you wanted to add, getting that up to over $3,000. Your cost basis would increase almost to $3,000 on 4 more shares. I could see that happening.
Yeah, because it's come down so much, because it's below that historical PE ratio. That's
Let's go. CRM.
Yeah. So
do you feel any threats from other industries here or any other stocks like Microsoft or, from a CRM standpoint?
Oh, I think from my understanding of what is going on with Salesforce, I think it's Salesforce is the threat to Salesforce right now with the AI implementation. How are they going to integrate AI into their process? It hasn't quite picked up as fast, but we've talked about this here. I made a comment here about now even Zoom is flashing its AI companion as we're recording this. It's AI is everywhere. So I don't even know how AI a year from now is going to look like now. So maybe Salesforce being a slower mover to figure out the right way to do is probably not the wrong approach for that. So instead of rolling out something clunky, who knows?
Oh, gosh. So that's Salesforce, Bert. What about the second stock here?
Alphabet.
Gobbling up.
Yeah, I've been scooping up Alphabet, ticker symbol GOOGL. I said I at least want to get 5,000 between my wife's portfolio and I. Now I've upped it. I said I probably want to get to at least 10,000 of Google between my wife's account and my account. And right now we have 47 shares combined between the two of us. Our cost basis is 8,200. We're down 11%. So our market value is 7,300. Why, Lanny? Because Google just keeps falling. They are down 18% year to date. It is every time it drops another $5, I keep buying more. And I feel like every week for the last month or two, I've been buying at least 4 or 5 shares of Google between our two accounts.
Insane. Not only below 160, but below 155 a share. I mean, you've been buying it on its way down, averaging down your cost basis. I know your cost basis is around 174. So you're looking at a $20 ability to keep averaging down, which would really bring that average cost basis down. they're on the cusp of their first hopeful dividend increase. I think a lot of us dividend investors are waiting on it. But
Absolutely.
these metrics are looking great as well.
Yeah, their PE 17. That's below their 5-year PE of 26. Payout ratio is 8.9%, and that yield is now 0.52%. So a little bit below Salesforce. I'm with you. They have the room to grow that dividend. Follow Meta's suit. I think Meta had a 5%. Salesforce just down 5%. There's zero reason why Google can't follow suit and announce a 5% dividend increase as well. Regardless if they do or don't, I'm going to keep buying. And as I just said, I'd love to get it to at least $10,000 of Google. So I'm close to 50 shares, but I got to keep building it. That's gonna push it closer to that's gonna be 60 shares? No, that's gonna be 65 shares of Google. I need to get to 65 shares of Google. So I'm still 18 shares away. I'm not getting those via drip, I can tell you that much.
I think you can get there over time. Obviously, it's a lot of stock, a lot of capital to continue to commit each day, each week, especially when they're down this much. You don't know, you don't want to time it, so you buy it when it's a stock you want and they're down this much.
Yep, that's exactly right. So that was stock number 2. Was Google. Number 3, we're moving into semiconductors. Texas Instruments, ticker symbol TXN.
Oh man,
The most boring, but by far one of the most reliable Texas Instruments. Again, TXN. They are down. They're only down 6% year to date. They're never one of the fast movers, but again, solid, consistent from that standpoint. The interesting thing, though, Lanny, and this is what I was just double checking, so apologize for a little here. When we run through their metrics, Texas Instruments does have one little interesting thing about them. Their earnings are supposed to be down for 25, which has caused that PE ratio to spike up for Texas Instruments. That
that's interesting.
is 31 because earnings have fallen. It's above their 24 PE ratio. That payout ratio is actually close to 100%. It's in 96%. Yeah.
What the heck?
Very high. So they've had a 10% 5-year dividend growth rate, only down 6%. But, Laney, I can just tell you this right off the cuff. Based on these metrics, I am not adding to Texas Instruments right now.
No, at that high of a payout ratio and PE ratio being much higher than the 5-year as well. And I don't expect dividend growth. I mean,
No.
Maybe it was I don't know. We got to dig into that a little bit more with that high of a payout ratio.
I'm pulling it up on Seeking Alpha. Okay, so allegedly in December 2026, their earnings are going to be $7.33. But you've seen you've seen this story before with certain companies. When you're banking on earnings to grow significantly in that second year and you're basing a decision based on a future growth, that's sometimes where you can kind of get caught with your pants down a little bit when the tide pulls back. So
that's interesting. They're only down 6% this year. That is very interesting.
Yeah, I guess I have 28 shares. I have about $5,000 market value. Their yield is 3%. I'm up 11%. I guess my question would be, maybe do I pivot and sell?
You exit?
Yeah. Do I exit Texas Instrument might be the more appropriate conversation. Everybody throw it in the comment section below. Would you consider exiting Texas Instruments? That wasn't something I was thinking about entering the video, but clearly you can see where this conversation is steering. I'd love your thoughts on all of that. Throw it down there.
I think it's a great question. 160 billion market cap. Should Bert sell TXN and possibly even move it just to SCHD and call it a day? Let us know in those comments, guys. But we got 4 stocks here, Bert. That fourth tech stock. Oh boy, which one is it?
We just talked about them. It's Qualcomm, ticker symbol QCOM. Their metrics continue to look great. They're barely down year to date, down 0.59%. Still up 134%.
That's not a good bunch.
Yes, best loser. Their PE 13 below that 18.5 historical PE, 30% payout ratio, 29% payout ratio. They're never the best dividend grower. They're always mid-single digits with a 21-year straight increase streak for them.
Metrics looking great. Obviously, you have a nice gain position. You own 40 shares, market value a little over $6K, but you got a nice unrealized gain right now. Yep. I know that's always hard to average up in share price because that would be about a $30 jump in share in average purchase price. I like the metrics. Yeah, it's not like it definitely shows undervaluation with the 13 PE. Yield over 2.2% is real solid. 168 billion. That's a good company, good
Yeah,
stock.
it's a great stock. One I wouldn't mind nibbling on, especially if I just want to invest. I don't know where to put $150. Qualcomm is a great contender for an extra share or two. So those are the four: Salesforce, Google, Texas Instrument, Qualcomm. Three yeses, one no. I'm not investing in right now. Do you agree with that decision? Everybody, let us know. Throw it down there in that comment section below.
Guys, let us know what other stocks you're buying this year. What passive income are you adding to your portfolio? Subscribe, like the gosh darn video. And we got one thing left to tell you. You're either with us or you're against us, Jack. That was Bert the Herd and Laney from the Dividend Diplomats. Over and out.